Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Let's take a look at how Wall Street wrapped up last night. It was a pretty subdued session, very marginal gains. We've got the S&P 500 ticking higher, 0.2%, setting an all-time high. The Nasdaq Composite also up 0.2%, and also marginal gains for the Dow Jones Industrial Average, up 0.3%. And that's around 150 points to close at 45,565. So all eyes on Nvidia, which reported numbers after the market closed. So let's get into it with Rodda. He is the Senior Financial Market Analyst at Capital.com. Carl, good morning. How are you doing today?
Good morning. I'm doing great. Thanks for having me.
Yeah, busy day for markets as we digest the numbers out from Nvidia. Give us a sense. Was it a surprise for you first? What were the numbers like in line with your expectations?
Well, the numbers were actually really good, but I think if you look at the share price reaction, effectively the numbers had to be absolutely spotless for the markets to really buy into the news, and they weren't quite that spotless. So we had obviously the data center revenue coming a little bit lower than expected, and there's this kind of cloud over future Chinese revenues, more or less because of the ban on the H23 reform. It's not even a ban anymore, but it's questions about to what extent. So there was that kind of data clouding the earnings coming off the top side. Revenue guidance for the next quarter was basically better than expected. All of these key metrics are really, really solid, but it wasn't good enough really just because expectations were clearly set so high.
Yeah, expectations really high, and I think a bit of disappointment coming through on the forecasts. So just to recap that forecast, the AI chip maker is expecting revenue of $54 billion. That's pretty much in line with the average forecast on Wall Street of $53.14 billion. And of course, a lot of focus on the Chinese market, where they managed to get a bit of a reprieve in the past few months by getting restrictions lifted to sell to the market, but with a 15% cut to the U.S. government. So a lot of focus on Nvidia's earnings. What do you see playing out for the rest of the market? Because there was a lot riding on this in terms of how this could steer broader market sentiment.
Yeah, well, in post-market trade, we've only got shares down by 2%. There was a bit of a knee-jerk reaction where the drop was a bit larger than that. But effectively, it would seem that for now, the markets are kind of taking that in stride. Because if you do look at, the numbers, if you want to infer kind of a macro story as well as a sort of an industry story for artificial intelligence, all the makings of a still really strong narrative continue to be there. Revenues continue to surprise the upside. There is a sense that the ramp up of the Blackwell chip is reasonably solid still and meeting fairly strong demand. You even sort of look at the China story as well from the basis that even in the absence of those revenues, they basically did not exist for the last quarter. The company still managed to exceed revenue expectations. And if you sort of factor in that the company is saying that it does expect that shipments will be, picked up again over the next quarter or so, there could be an extra, hit to revenue, a boost to revenue by about $2 to $5 billion for the quarter. So there's all these things that you can kind of suggest that, the markets aren't going to necessarily take this too negatively, because there's still a lot of, strong elements to that AI narrative that sort of, supporting Wall Street and keeping Wall Street at record highs and still very, very richly valued. So it would appear that really this is kind of a fairly lukewarm number. Maybe we'll see a little bit of negativity coming through the session in futures, because again, if it is a big player in the market, it is down in post-market trade, and it wasn't an absolute, shooting of the lights out by the company. But overall, we don't get a really clear company signal or macro signal here other than, okay, well, the bar's set high, didn't quite meet it, but there's nothing really yet to sort of catalyze a big sell-off. So it might be a little bit of a mediocre day's trade just on the basis of this news.
Yeah, so just to recap those numbers for the Q2 quarter. So earnings are up 59% and revenue is up 56%. So there's been a lot of talk about how the AI bubble is a bit frothy in terms of valuations. What does this tell you about where things are going? Is there still further room to ride this bandwagon?
Well, it would appear so. And I mean, this is the thing, isn't it? It's that to what extent is all of this investment creating excess capacity that is eventually going to cause some kind of popping of an AI bubble, or at the very least, a significant slowdown in growth? And I mean, it's probably one of the reasons why the markets have seized upon this kind of slight miss in data center revenues, is that there is this constant concern that, basically this is going to slow down precipitously and that we're going to be ending up in this situation where there's been a lot of, good money thrown at bad effectively. But at this point in time, if you look across the entire earnings season, just in that very narrow window of this quarter, AI companies, the hyperscalers, are monetizing their AI investments. They're flagging continued investment into the AI space, which is going to trickle through to Nvidia. Nvidia is saying that it's still ramping up its Blackwell chip and it's still seeing fairly robust demand for it. So although the music may stop at some point in time and it might prove that, maybe AI isn't at all it's cracked up to be, at least when it comes to the sort of narrow window of this quarter, the next quarter, maybe slightly beyond that, everything's being painted in a fairly rosy fashion. There's a lot of good news priced in, but, there isn't that kind of catalyst yet for investors to say, oh, this is a bubble, this is extreme overinvestment, and, we're seeing extreme excess capacity, let's sell all these stocks. It could happen, but, there's nothing there yet to suggest that we're at that tipping point.
Yeah, Carl, switching tracks to another data point that could move markets, and this is the inflation reading in the form of the PCE index. That is the Fed's preferred gauge for inflation. What do you expect on the front, especially with the tariffs hanging over the outlook for the economy? How much is going to be priced in on the front?
Well, basically, the markets are expecting a lift in the core PCE index to 2.9%, obviously on an annual basis. And I think there's going to be a high tolerance, obviously, for a drifting higher of inflation, core inflation over the next few months, really on the basis that the Fed has taken this dovish pivot, obviously at Jackson Hole. And if you look at the last summary of economic projections released at the Fed's last meeting, for whatever it happens to be, it forecasts that core inflation should get up to around 3.1% by the end of the year. So with that, the Fed's also said that it's expecting that it will still be able to moderate interest rates very slightly, cut them very slightly. So there's going to be a bit of a tolerance there for this kind of upside drift because of tariffs with inflation. However, if we do see inflation picking up more than expected, and effectively with this data, if core inflation comes out with the 3 in front of it, that's going to start raising those questions again. Not so much maybe if there's a cut coming in September, but whether there'll be further cuts beyond that, because the markets are still dabbling with this expectation that there could be a cut at every meeting for the Fed for the rest of the year. So 2.9 the expectation. If it comes in there, that's pretty much consistent with the Fed's guidance and the market narrative. But if it comes out with a 3, then you start to wonder whether inflation's picking up more. We're already arguably in a position where inflation is, sticky and moving away from target even without tariffs. So again, if it has that 3 in front of it, that could be a little bit of a shock to a pretty expensive market at the moment.
All right, stocks falling in the overnight session as we see Nvidia fail to inspire, and also we've been breaking down what to expect in the PCE inflation reading coming up in the next few days. And we've been in conversation with Carl Rodda. He is the Senior Financial Market Analyst at Capital.com. Carl, thanks as always for your time and insights.
Thanks for having me.
Great having you on. All right, stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.